Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host. Thank you for tuning in. Please subscribe if you haven't already. Also, pay attention to our sponsors, Inventa Capital, and the wonderful mining companies that we are exhibiting in the interlude period. Now, we have a man from Portugal, now in Seattle, in the United States, Diogo Mónica. He'll have to unmute himself when he gets ready, but he is going to discuss with us the future of banking in the cryptocurrency environmental era. He is the co-founder and president of Anchorage, and he has a PhD in computer science from the University of Lisbon. Diogo, first time, I'm so pleased to meet you. Thanks for joining us.
Thank you so much for having me.
Right, mate. And a lot of people who are fans, especially maybe the crypto or the anarcho-libertarians, are eager to see cryptocurrencies basically dislodge banking, or at least central banking. What is the noble or market role for banks within the crypto environment?
I think the first and foremost part of the reason why we're talking about this is Anchorage in January became the first federally chartered crypto bank in the United States. And the reason why that's important is because it elevates the conversation and it elevates the type of institution that is helping companies come into crypto. The reason why it's important is because there are some really good aspects of the regulatory clarity of being a bank that help very large institutions that are allocating assets into crypto or really trying to build products in crypto. One of the things that happened in 2020, as you know, is the fact that PayPal came meaningfully into the space, and so came Square, adding Bitcoin buy and sell alongside equities and allowing retail to access these types of investments in an easier fashion. But they themselves need institutions and banks and platforms that allow them to actually add that to their platforms and to their product offerings.
I understand regulatory environment is coming, institutional participation is coming, but let's say we exist outside of the fiat currency world and, okay, you want to have regulatory compliance, you don't want there to be uncertainty, but people could say cryptocurrencies are peer-to-peer, right? Why do we need an intermediary? And in fact, I'll give you be charitable here and say, well, obviously people say that, but then they do use the exchanges anyway. So there's something going on there. What are we missing when we just say that these are peer-to-peer vehicles?
I think the main thing that we're missing is that from a technical perspective, Bitcoin is incredibly hard to safekeep. And so the same way that the majority of the gold out in the world is not stored under people's mattresses, you should also not have the majority of the Bitcoin stored under people's mattresses. It is a technical asset that is very hard to safekeep. It's very hard to maintain. It is hard to integrate with and to create the security systems that are necessary, not to safekeep $10,000 worth of Bitcoin or, 1 or 2 Bitcoins. But if you're storing tens of thousands, hundreds of thousands of Bitcoin, the type of specialization that you need to do is very different than the type of specialization than any company out there can currently do. And this is why companies like Anchorage exist, right? So you're not missing anything. The fact that Bitcoin and blockchain allows people to be their own bank, that is amazing. That is necessary. That is required. It's part of the reason why this is so great. And it is a peer-to-peer payment system that allows us to actually transact without middlemen. But just because this permissionless component needs to be there for it to be successful does not mean that very large institutions should store their own crypto. In fact, the opposite. They are not specialists in private key generation safekeeping, which is the underpinning of blockchain. And so they should delegate that to specialists. And in this case, Anchorage both has the best technology and is regulated as a bank.
So security or just stewardship, you might say, or storage is one element. Gosh, we should have a debate of this one of these days. I'm not an expert to debate you as to whether Bitcoin is hard to hold on a personal basis. And then what about the privacy aspect? Can banks offer some shield of privacy? Or my fear is that regulatory engagement would actually be the opposite, that it would open you up to more oversight or more surveillance.
Well, I would say that maybe we'll start with the technical aspects. I think it's pretty easy for us to go see. Even recently, because of the run in prices, every time Bitcoin price, there's another bull market and the prices increase to all-time highs. All the news articles and newspapers and journalists rehash all of those interviews with people that have lost God knows how many Bitcoin that are now worth $200 million, and they're, looking in a
Yeah.
pile of trash. And so that's the perfect example of why these things are hard. If you think about Bitcoin as very long passphrases that you have to memorize for you to actually keep ownership of your keys, and if you also add to that the fact that people are terrible at remembering the passphrases, and you further add the fact that there's no password recovery in Bitcoin and no email recovery process, then all of a sudden you have a very powerful combination to actually lose wealth, right? So on that aspect, I would definitely point out that there's quite a bit of evidence on how hard this is. And institutions cannot rely on these consumer type products. Either they build it themselves, which is incredibly hard if you're storing $100+ million worth, or you have specialists like a platform like Anchorage that does it for them. In terms of the second aspects and your questions around banking, I do think that it is pretty amazing to see how much and how far we've come in terms of clarity and in terms of investment and in terms of the amounts of assets and the way with which institutions have actually come to this space, meaningful way, specifically around corporate treasuries. You saw Tesla, you saw MicroStrategy, you saw Square actually taking meaningful positions in the space. So that's actually a pretty great narrative. And they're doing it for capital preservation. So the same reason this kind of safe haven of gold, that is one of the equivalent arguments that people are using now to take some of their balance out of their treasury and put it into Bitcoin. So that's also pretty exciting. And it definitely started happening and is encourages seeing more and more of these clients and these corporates coming to us with the same exact goal.
Yeah, one aspect which I expected you to refer to but didn't, and maybe maybe that you were going to get there, but is the way that banks traditionally, at least in a free banking environment, were in some ways resource allocators, right? So they were more intermediaries in between lenders and borrowers. Is that a part, do you foresee that rising, that when we get maybe more price stability to cryptocurrencies, there'll be a bigger credit market denominated in cryptocurrencies?
I think maybe. I am not seeing that just yet because to another aspect that you mentioned, obviously safekeeping of the private keys and the technical aspects are very important, but so is liquidity. That was another thing that was missing in 2017 in the last run up that was primarily retail driven. Institutions did not have really good ways to actually enter the space and not move the market when they were taking large positions. And now we saw, Tesla take a $1.5 billion position over the span of a few weeks. Same thing for MicroStrategy. So Anchorage also has brokerage, and we allow people to get the best price on the market. And this liquidity component is as important, of course, as the aspects around safety. And then the final one I would say is the regulatory aspects, which we're also covering on the actual banking license, which is where we begin. I think in terms of these are the main aspects that were actually there. In terms of the ability of using the capital in crypto as a traditional bank would in terms of deposits, I will point out that we are a little bit of unique because we only serve institutions. We do not deal with retail. So if you, as an individual natural person, you do not sign up for Anchorage, we serve, Visa is one of our clients.
Why is that? Why is that? Why are you avoiding individuals?
It's the mission of the company. The mission of the company is to legitimize cryptocurrencies as an alternative financial system. I don't personally believe that we will replace the current financial system. We will not replace the central banks. I think we'll coexist. But I do think that we need to legitimize it because we need competition. The current traditional financial system has been suffering for lack of competition for way too long. And we know that competition will get us better products for you and I. And so bringing competition to the space is important. And for us to do so, there needs to be a company that is a bank and that offers a platform so that other companies can build in crypto and create competing products and actually participate in this space. So that's what we're here to do. So we're in the back end. We can do B2B2C where you can, offer a product to your retail products through the use of Anchorage, but we are serving primarily institutions, corporates, other banks, neobanks, challenger banks, exchanges, miners, large asset managers, family offices, you name it.
Okay. Yeah, so that is, well, we don't need to worry so much about, well, we can get to the challenge to central banks, but one thing you hinted at is maybe the profit model of cryptocurrency banks, because of course, if you're not acting so much as an intermediary between lenders and borrowers, rather you have to make money through as you said, as a broker between fiat currencies and various cryptocurrencies, or between the cryptocurrencies themselves. Do you want to do you want to give us a comment on as to how sustainable that is? If people move a great deal of their transactions purely into cryptocurrencies, will it still be profitable, or are you relying upon between fiat and crypto?
Yeah, it's an interesting viewpoint, because I think we sit in a hybrid of the traditional market and in gold. And what I mean by that is the following: our business model is we charge assets under custody on a yearly basis for every dollar equivalent of Bitcoin, Ethereum, and all these hundreds of crypto assets that Anchorage custodies. We charge that. And so that's one of the main ways that we make money. We also charge for brokerage, for buy and sell. And we also have a lending facility that is actually one of the fastest growing revenue lines, because there's a lot of interest to borrow Bitcoin. And so our clients put their crypto, Ethereum, Bitcoin, so on our pools, and then we lend it out and we generate yields for them. So Bitcoin is a productive asset. And in fact, it's a very highly productive asset. And so our Ethereum, and the rarer the cryptocurrency, the higher the yield that you can get on a yearly basis for actually lending out to our lending pool. So that's very interesting. And so in the traditional market, I guess you'd call that, even though a lot of these cryptocurrencies aren't securities, you'd call that securities lending, right? A lot of the money that brokerages make is on securities lending. And then on the custody side, the interesting thing is that in the traditional market, custody is essentially zero or as close to zero. But in precious metals is not. Why? Well, because you need to pay for, the actual warehouses and the security guards and the vaults. And for crypto, it's the same. It is very similar. The more crypto you have, the more you have to invest in security. It is not like keeping your shares at DTCC, right? And they're just there, and any bank can reverse any malicious transaction, or any court can change a transaction in ownership. And there's an easier way, because it is just an entry in a database, and a database that is not indelible. It's just a database. So we can change it and change ownership. With Bitcoin, that's not the case. Once a transaction moves, it is complete. There's no clawback. And so the type of security that you need for it is completely different. It is a lot closer to the type of continuous investment that you have to do for gold. If you have $100 million of gold in one warehouse, you spend X in security. If you have $100 billion of gold in a warehouse, you spend a lot more than X in security. That's the same thing for crypto. So that's also unique in the sense that I think there's always price compression in custody, but custody for crypto assets will be closer to custody, I believe, in terms of pricing for precious metals, because it is not the same type of investment for $1 billion of cryptocurrencies than for $100 billion of cryptocurrencies.
So at least for now, when you are a custodian, you're not paying interest on that. You're actually charging for stewardship, and you are lending it out. You are an intermediary to some degree, though you said that's still relatively new and growing. The actual
and I will point out that it is not the default. It is very much an opt-in. The default is that people pay for custody services, and they are the owners of these assets, and that's it. And we can't do anything with them but safekeep them. And in fact, it's pretty interesting because with cryptocurrencies, if you're a client of Anchorage, you can track them on chain. You have your own addresses, completely independent. There's no commingling. You have your own assets. They're on chain. They're there for you to see and track. And so you actually can, sort of like a camera pointed at your gold, you can actually every day, independently of Anchorage, check that your crypto is still there, which is amazing, and actually provides you, a sense of a safety that you can't really get with the traditional financial systems. And we don't touch them. In fact, we can't really move the transactions without your approval. So that's the normal process. However, you can opt into having a lending relationship with Anchorage, in which you decide how much crypto you want to send to our lending pools, and you send it explicitly to the lending pools. And the moment it's part of the lending pool, then we have control over that, and we can actually lend it out. But it's different in a traditional market or a consumer market, where the moment you put some US dollars as a deposit, the bank has the ability of actually just going out and lending it.
I guess you're trying to assuade those fears that there's fractional reserves going on.
Yeah, absolutely. There's not. You own your crypto, you own your addresses, and that's it. And you can see them, and you can check them on chain, and you can check them independently of Anchorage.
Yeah, it's fascinating because a lot of people say that, or there are the ongoing debates about whether fractional reserve banking must exist or whether 100% reserves can exist. When you're saying that basically, at least your initial foray with Anchorage is with 100% backing, but you can opt in to have, I guess, limited availability of your own funds, but basically have it lent out. Now, given the volatility of the prices, have the borrowers struggled to repay, or is the repayment denominated in US dollars in terms of Bitcoin value or cryptocurrency value? Just the US dollar value must be paid back.
Yeah, it really depends. So when I say lending, there's two components to our financing product, and both of them are growing really fast. One of them is really interesting, but our clients that are crypto rich, they have a lot of crypto. Let's think about, a client who has $1 billion in Bitcoin. They can actually take US dollar denominated loans against their crypto collateral. So that's one of the services that we have. If you have crypto, we can over collateralize it, keep that Bitcoin and manage that Bitcoin. And we do the risk analysis, we do collateral liquidation if necessary, but we have crypto as collateral and you have borrowed US dollars. That's a very fast growing element of the business. The other one is this reverse, in which you put crypto in your lending pool and then we are lending them out and generating yield. We haven't had any problems with these kinds of loans because them themselves are also collateralized. And so there's a lot of safety built into it. And because cryptocurrencies are nascent and there's not as many lenders, the borrowers actually have terms that are very distinct than the traditional market in terms of over collateralization and in terms of sensitivity to price and in terms of APY that they pay. So it's significant. These we're talking about for Bitcoin, mid to very high single digits of return, and that's just for the largest asset that has the most borrow. And so that's fantastic as a return, right? If you're generating very high single digit return on a yearly basis. And for other cryptocurrencies, there were cryptocurrencies generating 20% APY or even more. And so it's pretty exciting for clients to have an actual actively generating, active yielding asset, not just a cryptocurrency that is sitting on a vault somewhere.
The Gold newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
Hi, this is Brian London with this week's CEO interview, in which we interview the CEO of one of the companies within the Inventa Capital Group, which is the sponsor of the Gold Newsletter podcast. This week, we're talking with Cameron Tymstra again of Tarachi Gold. That's symbol TRG on the Canadian Stock Exchange. Cameron, great to have you back. We were just talking before I started recording how great it is through these podcasts for me to be exposed to companies we don't already recommend in Gold Newsletter that are very interesting and high potential. In Tarachi Gold, I'm just amazed when I look at it and look at your market cap right now. And it's such a fascinating story because it is, I guess, a development story hidden within an exploration story, or an exploration story hidden within a development story. How do you position it?
Well, I think a lot of people maybe know Tarachi Gold as an exploration company because when it was first formed, sort of in the spring of last year, it was formed by the signing of 2 option agreements for an exploration package in Sonora State, Mexico, close to Agnico Eagle's La India mine and the Mulatos mine belonging to Alamos Gold. But then we recently acquired the Magistral Mill and Tailings project, which is our development story. And it's a project that we plan on putting into production as early as probably early next year. And once that's at full capacity, we expect that to be producing about 15,000 ounces of gold. So, what our strategy is with Tarachi and the story that we want to bring to the market is that we're certainly part exploration company, but we want to be a self-funding exploration company, one that can actually generate its own cash flow in the near term from this Magistral asset, and to be able to use that cash flow to continue exploring in other properties without having to continuously dilute shareholders in the future.
When you look at that production rate, you could essentially duplicate your current market cap in the first year. So that's pretty compelling numbers. Those are pretty compelling numbers, and gives our viewers an idea of how undervalued you are right now. If I look at your share price, if and when the market for junior mining shares just gets back to where it was last August, your share price could all on its own in that kind of a market environment essentially triple in value, but you're a much better company now than you were back then, closer to actual cash flows, very significant cash flow through production, and drilling away on your exploration portfolio, which consists of a number of properties peppered throughout the legendary Sierra Madre exploration belt gold belt in Mexico. Can we talk a little bit more about those properties and the drilling that you have going on right now?
Yeah, so our properties are in that Sierra Madre gold belt. We kind of split our Tarachi properties into Tarachi North and Tarachi South. Tarachi North being a little bit northwest of the La India mine, where we're currently drilling right now. The concession that we're drilling on is called the Habali concession. That concession is actually close to the Mulatos mine. That concession, we've been drilling from some old underground workings called the Ladura mine. And we released our initial drill results back in December, and some of them in sort of in early February as well from our underground drilling there. And we were seeing grades and intercepts approximately 4.5 to 5.5 grams per ton over intercepts of about 15 to 20 meters. And so following up on those, we went back underground with the underground drill rig. We've since completed 3 drill holes underground as well at the end of last week. Those holes will be sent to the lab this week. Unfortunately, with some backups at the lab, we don't expect to have results for about 6 to 8 weeks. But in the meantime, we'll also be mobilizing a surface RC rig to the same concession. And with that RC rig, we plan on targeting the 400 to 450 meter zone between those Ladura mine workings and some other workings to the south called the Zaragoza workings, where underground miners were targeting very similar mineralization and seeing similar grades to Ladura. And so there's about a 400 or 450 meter sort of unmined or untested region in between those two sets of underground workings. And we'll be targeting that region with the surface rig.
You know, you made a good point earlier that you used to be just an exploration company and were fairly highly valued just on the basis of those properties. So we don't want to overlook that, even in light of the cash flow coming up. When I look at some of the historic grades coming from your properties, it's really quite amazing. And when I say historic, even last year, some of your channel sampling was just extraordinary. Can you talk about some of the historic grades and what your recent work has uncovered?
Yeah, initially last year when we went to Ladura on the Habali concession, we started off with some chip sampling and some channel sampling, and we had about 6.5 grams per ton across the underground face of about 65 meters. And that's what prompted us to actually get the underground drill rig in there and to kind of see what the extent of this is. And then up on our Tarachi North concessions, there were some historic drill holes drilled in 2014 that intercepted about an ounce per ton over 5 meters and about 23 grams per ton over 3 meters. And so we did some drilling up there as well last year, following up on those higher grade intercepts. We encountered about intercepts of 11.9 grams per ton over 2 meters and about 5.5 grams per ton over 5.5 meters. And so we haven't sent a drill rig back to Tarachi North yet to follow up on some of those results. We do plan on getting the manned portable surface rig up there probably once we're done drilling at Habali with this round of drilling with the underground and surface rig drilling. And so we're going to be following up on the deeper extension of what we encountered in our previous drilling at the end of last year. And where we found that mineralization to be is sort of in the footwall of some breccia intrusives. And so we're going to be following up on the deeper extension of those breccia intrusives, which typically tend to be a little higher grade at depth, since the drilling that we've done so far was really just in the top 100 meters. And about a kilometer to the southwest, there are a number of other intrusive breccias just off of our property. And those were the target of underground miners in the past as well, targeting sort of 5 to 10 gram per ton material. So we think there might be a bit of a trend of these breccia intrusives that our property sits on. That's our San Javier claim. So we'll be following up with the deeper extension with some drilling and also looking to see if it continues more to the northeast.
I would encourage our viewers to go to your website and look at the cross sections of those breccia intrusives and what you're targeting. It look like really extensive intervals, really big targets, and again, proven high-grade mineralization. Sometimes high-grade is a bit expensive to drill off a resource because it takes a good bit of drilling. How well are you financed right now?
We still have about $3 million in the bank, so we're well financed to continue exploring on our Tarachi concessions, as well as to push Magistral forward. Right now with Magistral, we're undergoing a PEA with Ausenco Engineering. So that work has already been kicked off. We're sending a surface drill rig down to Magistral to actually drill off some of the tailings basin to provide material for some additional metallurgical test work that Ausenco is going to be overseeing, as well as to provide some more drill data to get an updated NI 43-101 compliant resource on the actual tailings basin itself as well. So we're well financed to pay for all of that work to continue moving our projects forward over the next 6 to 12 months.
When you look at a junior mining investment, you want catalysts coming up, and Tarachi Gold certainly has some exceptional catalysts, including high-grade drilling and that PEA coming up, which will put a fine point on the economics of the Magistral Mill, will show the market precisely how much cash flow you have coming up and how that relates to your still very small, in my opinion, market cap. Again, over the first couple of years, I guess a multiple of your market cap and free cash flow from current levels. So if you're looking at a right time to buy or look into a company, this is the right time to look at Tarachi Gold. Cameron, thank you so much for joining us today.
Thank you, Brian.
Right, Diogo, as you mentioned, the, let's say, conventional or orthodox banking sector is institutionally conservative and has been for a long time. But I assume your existence, and I'm guessing other players will be entering soon, is going to disrupt that. Have you already seen moves to replicate what you're doing to try to push you out of the market or try to dominate from established players?
We've definitely seen people following in our footprints, but that's actually a good thing, because I think this is really a raising tide that raises all boats. It is a lot more important for the space to become mature and for other federally chartered banks, and for the federally chartered bank, the same way that that is the high watermark in the traditional financial system, for it to also be in crypto. That's very important, because that regulatory scrutiny will make sure that there's, more oversight over these and less of what people believe sometimes still have this misperception of what crypto and Bitcoin is, which, sometimes gets associated with unsavory business, unfairly so, in my opinion. And this comes and completely removes that, because it just has the same oversight. In fact, our regulator, the OCC, the Office of the Controller of the Currency, is the oldest banking regulator in the United States. Right. And so it's the same exact regulator for our bank that it is for the other national banks.
Yeah, I've lost my train of thought now. I was trying to follow what you were saying there, but it is true that ideally you want to have more people coming into the market, as you said, lends legitimacy. Now, what about the actual day-to-day use? Now, maybe in your case, because you're dealing with institutional uses, the micropayments are not so crucial. I often wonder though, because in my own life, in my own business, in fact, I've sought to use cryptocurrencies, especially Bitcoin, to actually pay people, right? I've tried to bring my own work out of conventional finance, and since I work internationally, make payments, and I've always struggled because of the delays and the high cost of making these transactions. Is that actually going to change? I hear people talk about the Lightning Network, about off-chain transactions. Is that actually happening? Are micropayments becoming more viable in cryptocurrencies?
I think what's happening is you're seeing stable currencies rise. You're seeing an alternative cryptocurrency that is just pegged to whatever asset you want, the dollar, the euro, or a basket of them. And you're seeing the rise of stable currencies that have stable value that you can move with very low cost. And so I don't think Bitcoin is winning the medium of exchange market. And in fact, the narrative around a peer-to-peer payment system, as you know, has changed into a different narrative around store of value primarily. That doesn't mean that it'll be the last safe for Bitcoin, and also does not mean that the gold market is the only market cap that Bitcoin is going to take. I think it's a lot bigger than that. As an asset class, it's fundamentally different. The things that you can do are fundamentally different. And even in Bitcoin, I mean, think about the fact that, yes, it's high cost, say $12, $15, $20, $50 to transact, but you're not paying a percentage of the transfer value as you would if you're doing an actual international transfer. So if you're doing a cross-border transfer, you're always paying 40 basis points, 50 basis points. And here you're not actually doing that. And so technically it becomes cheaper because you're not actually being charged on transfer in terms of bips. You're being charged an actual set amount for transfers themselves. But I would go away from the medium of exchange narrative here for Bitcoin. And I would say the cryptocurrency market has adapted. We have stable coins, and the Lightning Network obviously also shows a lot of promise around very high, small amounts of transactions. But as you mentioned too in the beginning, Anchorage actually has very high dollar amount denominated transactions, and then lower on the number of transactions, but on very, very high dollar denominated transactions.
Yeah, that's interesting. Yeah, so there's basically economies of scale when it comes to transactions at Bitcoin. And I just know that, as you said, when cryptocurrencies first came to the scene, or Bitcoin first came to the scene, we all assumed it would be used as a currency, as an alternative currency, right? Day to day, as you said, as a medium of exchange. And that just hasn't come to be. And now it is fascinating the way that the advocates have changed their own rhetoric or their own promotional, not that I'm against them. I would like them to succeed, just that I think they have somewhat given up on that. They've given up on the hope that Bitcoin will become this replacement medium of exchange. So you're optimistic that stablecoins will fill that challenge or fill that space. Now,
I think, yeah, they're more a natural approach. And you have stablecoins, DM. Anchorage is actually one of the founding members of the DM Association, and that launch is going to be imminent. And that's one big world project or worldwide project, world impact, that is aiming to go after the billion people in the world right now that are either unbanked or underbanked. You also have Cello, which is another amazing project that is going after the same market, with the Cello dollar and Cello itself. And so these two components are actually being split out by these companies. Cello literally has a gold-like, a Bitcoin-like Cello and a Cello dollar, which is an actual stable currency, one explicitly for medium of exchange and payments, and the other one for value accrual. And
Diogo, why are you not optimistic that cryptocurrencies will simply dislodge fiat currencies? Why do you think there have to be these two ecosystems?
I think it's even if they do, is going to take so long. I never really believe that these things are going to just completely dislodge them. There is space for both. There will always be, the same way that not everybody owns gold and not everybody actually believes in gold as a store of value. It's impossible to think that everybody in the world at some point will believe in cryptocurrencies as the store of value. There might be an event like that. People call a hyper Bitcoinization. This change in which we start denominating things in Bitcoin and in Satoshis instead of denominating things in the US dollar. And that's possible. It's very much a future that is possible. But I think if we're betting, it is a lot more likely that we'll have, a coexistence of these two ecosystems versus one completely subsuming the other.
Why don't you, before we go, why don't you give us a little bit about what motivates you? Why you've left the academic world and become so passionate about alternative currency banking, and why, just what is so meaningful about it? I assume you do it for more than just cash.
Yeah, absolutely. There were a lot of other easier paths to get cash, maybe even in the ICO boom, have launched my own cryptocurrency, right? But the idea here is that after my PhD, I entered Square. That was actually the first company that I worked for, and I led the platform security team. So for 4 years, I was deep into the financial system and the payments industry specifically. And I just fell in love with payments and fell in love with these use cases. And the mission of Square was fantastic, to make commerce easy. And I really got onto the narrative of my skill set in security and my skill set in large distributed systems was useful in this particular world. And then after that, actually, before I go to that, the interesting curiosity or a serendipitous event was that I met my co-founder because he joined Square the same week, 10 years ago. He joined Square the same week, and we've been working together. And now he's my co-founder at Anchorage. And so
10 years?
Working together for 10 years. Yeah, since 2011. So 10 years this year. We joined Square the same week. Yeah.
It's been emotional. 10 years,
It's been amazing. And the fact we've always wanted to create a company together, and this was just a perfect Venn diagram of our skill set. We had been working on private key security, distributed systems, and in one way or another, working on these kind of value exchange networks. And all of a sudden we had the unique opportunity when all of these funds and all these companies are reaching out to us for help with custody back in 2016, 2017, just custody of crypto assets. And then from that moment on, it was clear that this was the challenge that was perfect for us to build, and the rest is history.
Why don't you, maybe a take-home message for people who are individual investors who, let's say, can't use your organization, but is this buy and hold speculative activity prudent? I mean, obviously the recent, return or fallback in the Bitcoin price has, been sobering to many people. Is this approach of just buying and holding foolish? I mean, I'm just trying to think, how can we take this message of a let's say a reimagined banking system with maybe, like you said, different ecosystems going on? What does the layman, how can he interact with or best take advantage of these new opportunities?
I think the clear message is we should take the modern portfolio construction the same way we do it for any asset. We just treat it as if it's another asset class. People believe in gold, people believe in the stock market, believe in bonds, then also believe in the fact that there is very high potential for this space. And that means that it's part of your portfolio. Diversified portfolio will have a percentage of cryptocurrencies in it. That much is clear. And if you see the best performing assets for 13 years in a row, it's pretty hard to justify not having a percentage allocated to your portfolio. So of course, the percentage is based on your conviction and it's based on your interest and your knowledge of it. But it's definitely part of a diversified portfolio to have crypto in it.
That's really, I like that. We're finished on a solid note there. I appreciate that. It was very clear, very clear. Okay, so let me just get your details here. Yeah, you can follow Diogo Mónica on Twitter. He's got a great following there. And Anchorage, his organization is just at Anchorage, the digital asset platform for institutions. And any other website here. He's also on LinkedIn. So just go to goldnewsletter.com/podcast for the show notes. And we'll have all the links we can. Diogo, a privilege to meet you. I'm glad you're working in this space and look forward to more good news for your firm. So thanks again.
Thank you for having me.